Today we're going to talk about stop hunts and consolidations. Stay tuned, traders. We'll be right back. G'day traders, Stacey Burke from Stacey Burke Trading. Tuesday, yesterday, a fairly buoyant day for a couple of the pairs. Reasonably good start to the week for our 50 pips a day simple Forex trading strategy. Now, I've received a ton of emails over the weekend. I received a lot of emails yesterday and a lot of questions on YouTube, and we're going to try and touch base on some specific things today to again just clarify our simple trading approach to the markets. Now, I know that a lot of you, even you've been following me for a while, you know that the basic steps are really simple, but inside of each one of those steps there's an immense amount of important information that goes into making that step simple, which is why we each day try to review and go over some of the steps in detail, because until you've had thousands of hours of screen time or chart time or practice time or live trading time, a lot of the same setups that recur over and over again in different subtle variations will still fool you or get you chasing in the wrong direction or get you jumping after a one bar pattern or not waiting for the proper timings. Little things that are all designed to trap us as retail traders and make us into losing trades. So today we're going to go over some specific setups. We're going to talk again about the three things that markets do. We're going to talk about the timings. We're going to talk about the round numbers. And we're going to talk about the power of stop hunts and consolidations and what's really important, some really basic things to understand each day around that simple strategy. Now, we've talked about the high and the low of the day and the high and the low of the previous day, the high and the low of the week, the importance of all of those. We've talked about 1, 2, 3. Monday, Tuesday, Wednesday typically will form the high or low or both for the entire week. Now, that may be inside of a previous week's trading range. Each session itself, the high and the low of each session, has a lot of information in that first 3 hours of the market opening in a 1, 2, 3, first, second, and third hour. Is that market setting that will set a high and a low typically for that session. The next 3 hours will either extend that range out, stop hunt it and reverse, or stay inside of a trading range. Again, every single those three areas apply to every single session, day, and week. The same things happen all the time. When we look at this, we look at the highs and the lows, we look at the round numbers, and typically the best trading setups will align at the right time off the numbers. Now, we will get great moves off of highs and lows as well, and in a lot of cases those will typically be trend trades. But today what we're going to talk about is two really basic things: 50 pip movements that go into consolidations and 3 push patterns. So when we come to the screen, whether it be in Asia, London, or New York, the first thing I will look for obviously is the high and the low. But more importantly, it's always important to know whether or not that market has moved or if it's in consolidation. If it's in consolidation, has that come off of a trend, a stop hunt, or an impulsive move? So sometimes we'll get a 1 or 2 bar movement to a high or to a low with a reversal, or we'll get an extended 25 to 50 pips move and the market will go into consolidation. So part of that process in identifying the high and the low is to recognize if the market has pulled back and gone inside and consolidated, or if it's extended out to the high or to the low. And that's where our other sessions and our other previous days high and low come into play. We want to know, have we extended out past a previous day's high and low? Have we extended beyond a previous US, London, or Asian session? So we could be inside of the high and low of the previous day, but have we gone outside of a previous trading range? So a lot of the best trade setups will often come after there's been a 50 pip movement and then the market has gone into consolidation. I received a question yesterday regarding one of the pin bars that printed in the Great Britain, New Zealand. Actually, I received about 3 emails regarding this. Some traders took that position as a long entry into the market. Now, one thing you need to understand is that the only time that you'll usually have a 1 or a 2 bar reversal is after you've had a 50 to 100 pip move at the high or the low of the week. Typically that will be a blow off move or an exhaustion move into a peak or into a bottom, but it will take a minimum of 2 bars to reverse a move. So that's 30 minutes on a 15-minute chart. It is never 1 bar by itself. So you would need to have one of those extremes violated, and also having taken out stops on either side from previous day's high or low, or from a previous weekly high and low. That's typically a blow off move for a V bottom reversal or a reverse V top reversal. So just to clarify, the other thing that was critical about that trade was that you will often have a pin bar print against an existing trade. It's a trap. So we had a short trade after a 50 pip movement yesterday, 50 pips off the top. The market went up 50 pips, consolidated and reversed, moved 50 pips down to the numbers, and then did 3 pushes. 3 pushes. So we talked about that third hour. They extended it out, and then they went 1 push, 2 push, 3 pushes, engulfment candle for the short trade, and then printed a pin bar 50 pips down. So you're going long against an existing trade that had a measured move for a 150 pip target. Very important, because if you understand and you start to identify those when you're in the trade itself, the original trade, you'll know that when you see that it's often a trap, and they will reverse that and stop that bar out, usually in 1 or 2 candles immediately in the direction of the original trade. So very important. But today what we want to talk about are 50 pip movements that go into consolidation. So typically when we get a 50 pip movement, that can come from a previous night's high or low that's gone into consolidation into the US rollover and Asian session. So you'll often see a US session low come into consolidation, move 50 to 75, maybe even 100 pips back up, and they'll roll it over and continue that move down through the low of the previous day. And the same thing applies for a long position as well. They will drag it down into the close, maybe a bit more after Asia, and then reverse it after working the low for a continuation back up for a measured move through the high of the day. Very important. But the first thing you want to look at is, has the market had a 50 pip movement? If it's moved 50 pips and gone into consolidation at numbers or at a previous day's high or low, previous session's high or low, or the current session's high or low, then we want to start thinking again, what do markets do? They do one of 3 things, especially if they're at round numbers. They will break out, pull back, and continue and trend. We've looked at examples, and we're going to look at some examples today of the best examples of these trading setups. This is one of my primary trading setups. There was a perfect one on the pound yen on Friday and the pound Swiss, and there was a perfect one on the pound Aussie and the pound New Zealand yesterday. These are ideal trade for trend continuation trade setups. They'll break out, they'll pull back, and they'll reverse. We call that a false break. So we'll often see, which was exactly what happened yesterday on the pound Aussie at the beginning of the day. They broke out of the high from Friday's high, went sideways for 1 hour, and then reversed. Pulled back one more little time and then dropped down below the numbers. High of the week, high of the day, breakout, pullback, reversal. It dropped 50 pips, dropped another 15, and then went into consolidation. They will break out, they'll pull back, and they'll go sideways into a range-bound market. The pound Swiss was somewhat of an example of that yesterday. It was around 2,000 major round numbers. It made a low, it made a high, and it sort of went sideways for most of the session. And that may be a reversal for today's session heading back up. We'll take a look at that after. But it's really important to look for 50 pips of movement. heading into a session, whether that's just a creeping trend of 50 pips up or a rollover movement and then an extension of that for 25 pips more. But that 50 pip movement and then consolidation gives us a lot of information to know if we're going to continue the trend, if that itself is a stop hunt working back against the trade or an existing trend movement, or if it's impulsive and going sideways into a range-bound market. Because if we have a consolidation that's setting up for a continuation or a reversal, last Thursday we had a consolidation after a 50 pip stop hunt to the low of the day and the low of the week for a 300 pip move up. Huge moves will come out of consolidations. So we're going to look at some of those today. But again, just to reiterate, identify 2 or 3 specific setups. Do not try and trade every single move in the market every single day unless you have a perfect playbook setup. And you should already have 1 or 2 of those that you've identified and picked apart and labeled and made notes of and gone back and found 50 examples of those so that you understand every nuance and subtlety of those trade setups, because they will very rarely look identical every single time, but the overall general pattern and behavior will be very similar. The other part is that consolidations can exist over an entire day. Often we'll see a major move come off of a day that's been range bound in a 50 pip bracket, and they will often be 2 to 3 times that range. Very, very powerful. Sometimes the consolidation can be over a session between Asia and London for a big move or a continuation or a reversal. But again, start to learn to identify the trade setups that you recognize best. I love it when a market moves 50 pips and goes sideways at the end of Asia, because that's ideally going to set up a stop hunt for either a continuation or a reversal. And we've talked about some of those last week. The other thing to remember is that a market that goes vertical at the high or low of the week will often be a blow-off move, especially not inside of a high and low of a week, but at the tops or bottoms of a high or low of a week. So typically the consolidation may only be 2 or 3 bars. And again, go back, find these examples on your charts and know what they look like, so that when you see them, you'll know the characteristics that are important. Has it moved 50 to 100 or more pips outside of the range of the weekly high and low? Sometimes you may only get a quarter extension on either side of that range, but you will often be at the extremes for that trading week. Stop hunts, peak formations. We talked about 1, 2, 3. We talked about that with the first 3 days of the month, the first three days of the trading week, the first 3 hours of the day. But also you'll see this in each session. When each session is painting a high and a low, you'll often get 1, 2, 3 bars making that stop hunt to the high or to the low. So it's really important, because sometimes there's a 4-bar pattern where they'll put a little doji in the middle of that 3-bar stop hunt. But those 1, 2, 3s are often catching traders in the wrong direction because they're impulsive. There's momentum. They do it fast. They pump the price, and people think they're missing out, and they chase it only to find out that they've just bought at the high, and the market now reverses and stop hunts down to the low of the session. So really important. We're going to look at some examples, but again, 50 pip movements that go into consolidation. So we have our high and our low. At the market opens, we want to pay attention. Are there any pairs that are at numbers? Again, I had people ask me why I follow the pound pairs. I follow them because they move. They move every single day. You've been following now, you know there's 50 pips, if not every session, in these pairs. You know, the spreads might be a little different, whatever, but there's 50 pips of profitable trading to be taken almost every single day in at least one of these 6 pairs. So that's why it's important to identify 2 or 3 really specific setups. Sit back, look at your screen, start to filter out which ones don't fit that setup for today at that current time. Not to say that in an hour that might not have changed, but you want to start to identify which ones fit your criteria, which ones might be in consolidation, and then narrow it down to 1 or 2. Pay attention to the clock, understand that at 9, 9:15, 9:30, 9:45, that may be a stop hunt. And then when London opens, they may continue that move, or they may put the first part of that hour back into the stop hunt to reverse it for a continuation in the last part of the hour. And then in the third hour, extend that move out. There's your high and your low. There's your 50 pips. And in the second, third hour, they consolidate and reverse it back up, and stop hunt traders who are short already for their 50 pips that didn't take their money off, which is why we talk about having a one bar stop, having your profit target programmed in. Don't be making decisions on the fly. Plan your trades out. Take the money off the table, but also be willing to see and trade in both directions, because sometimes that move that's aggressive and fast for 50 pips is not necessarily the trade. It is a trade if you're in already. But if it pulls away and gets traders chasing it, that is often the trap. And when it goes into consolidation and we have the stop hunt back for 50 or more, that's often the trade setup. So just something to think about, but really important. The one thing I want you to walk away with today is that look for markets that have had a 50 pip movement in Asia. Think of just in common sense, even from the low or from the high, if a market has pulled back at least 50 pips into the previous day's session or extended it out, there's at least 50 pips of movement to stop hunt in either direction from that trade setup. But a 50 pip pullback into the previous day's range is often enough to stop out retail traders that are in an existing trade, but it's also enough of movement to set the market up for the move back in the other direction or to continue that move down. So look for round numbers, 50s and zeros. We are seeing a bit of 25 and 75. They are typically, though, at the highs and lows of the day. And in a lot of cases, you'll see these show up with trend trades, either blow-offs at top of the week or the bottom of the week, or with an existing trend for a continuation. Remember, 3-hour blocks and then that extended 3-hour window. Are they extending the initial high and low? Or are they inside of that range? And another thing, this first 50 pips of movement, really important. If the market has gone into a new round number box, think back to here, breakout, pullback, continuation, reversal, or a range bound market. Every time you go into a new double zero box, we could be in a trend situation, we could be in a false break, or we could be in a range bound market. So hopefully you got some value out of today's video, traders. Again, we're going to go through some chart examples next. Keep it simple though. Consolidations, huge moves come out of consolidations. Just remember that. Have a great trading day, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.